Hello guys, welcome back again to my YouTube channel. Welcome to Pepsi Institute. For those of you that are just coming here for the first time, I welcome you. Please make sure you give me subscription, and make sure you give me a thumbs up if you watch and you like this video. Okay, that being said, today guys, I'll be talking about is something very special, a strategy that you can use and then you can use to pass any prop firm account, and you can even use them in trading prop firm accounts, because this strategy is actually a low risk strategy, and it is invented by Mike Hudson, the SMC trade, the SMC inventor. Shout out to him. And this name of the strategy is called the London Q zone strategy. Actually, we have some other strategy we have the Asian Q zone strategy, then we have the New York Q zone strategy. In my subsequent videos, I'll be talking. I'm still going to make a separate video on Asian and New York Q zone strategy. But for now, let's just look at the London Q zone strategy, how you can use them. So there are some things that I want you to know about the London Q zone strategy. Number one is that during the London session or the London Q zone time, there are always a bunch of activities going on in the forex market or in the trading markets generally. So you want to pay much attention to it. Another thing is that at the London Q zone strategy, at London time, this is the time that either the high of the day or the low of the day are being formed. So in any pair. So either the high of the day are being formed or the low of the day are being formed. So you want to have that at the back of your mind also. The third and the last final one that I want you to understand is the time for this London Q zone, this London Q zone, that the time they occur is around 2 o'clock a.m. to 5 o'clock a.m. New York time. And if you're going to convert it, I'm from Nigeria, I'm a Nigerian, so that should be around 7 o'clock a.m. to around 10 o'clock a.m. Nigerian time. But wherever you are, if you're from India, South Africa, US, you don't have to convert. Any other country, and you just have to make use of the New York time from 2 a.m. to 5 a.m. So you convert it over there by yourself. So that being said, let, let us dive into what we'll be talking about today. So we'll be making use of some indicators that are going to help us in understanding this strategy, and that's going to make this strategy much more easier for us. So the first thing we'll be setting out is the the daily the daily separator. So if you want to make it, so just right click on your system, and this is trading view. So then you come to settings. So from settings, then you click on event. So it comes to this place. So you then tick this session break. As you tick on this session break rather, you see it's going to divide the markets. Can you see that it has divided the market for you? So you can, so there's already a session break. So that's number one. So the next indicator we'll be using is session by Lux Algo. This session indicator, what it's going to do for us is going to help us to know when the northern Q zone would be the time for the northern Q zone. It's going to indicate it on the chart for us. So we have just click on come to indicator, then click search for type session. So you're going to see session, so by Luxhago, then just click on it. It's going to automatically plot on your chart. Then you go back to the chart, and then you're going to make some adjustments. You're going to make some settings so that they are going to suit you. You don't need all these things you're seeing. All you just need is London. You could see Tokyo, Sydney, and New York. But the only thing we need is the London session. So you have to come here. Then we click on settings. We click on settings. So we untick New York and New York range. We are going to leave London and its range. We untick Tokyo and Tokyo range. So the next thing is we come back down here. We have to untick we have to untick we are going to untick Sydney too. I think there's Sydney over there. So we have to untick Sydney too. So we have to untick Sydney. So we have to untick Sydney. So then we go back to London. Then the time for London is 7 o'clock to what time? We say the Q zone happens around 7 o'clock to around 10 o'clock. So we have to set it to 10 o'clock. So then we click on OK. Then I think that is all that we need to know about it. So our chart is ready. So now it's now time for us to go to the strategy proper. So like I said that during the London session, the high of the day, it's there's major the probability that the high of the day and the low of the day will be formed during the London session is high. Not that it forms all every time in the London session, but not every time. But there's probability that the high of the day are always formed during the London session, and that's around 2 o'clock a.m. to 5 o'clock a.m. New York time, and between that is when you convert it to Nigeria, it will be 7 o'clock a.m. to 10 o'clock a.m. Nigerian time. So you want to make use of that. So the first thing you want to look out for is that you want to look out for your um your high of the day. Okay, that is immediately it is 7 o'clock. You want to be on the chart just to know if you can kind of know where your high of the day really is. And I'm telling you, this strategy really works because it really works. It really works. So guys, let us dive into the chart properly. So guys, this is good 15-minute time frame, and this is the London Q zone right here. You can see that it has mapped it out. So anything within this range, we are going to look at either the low of the day being formed or the high of the day being formed. Now, the question that you guys, most of you are going to ask me is this: that how are we going to know that we are at the low of the day or at the high of the day? Very simple. There's nothing for you to worry about in this. Once what you want to do is that immediately it is around 7 o'clock, you want to be on your chart. Are you with me? So, and before I proceed, I want to make this, please. This thing actually happens in all pairs, all currency pairs. So you can just, at least in a day, you are going to find setup. You can, all currency pair cannot be so foolish or cannot be so I mean, they cannot be so stagnant and not dormant, and then they will not provide you with either a low of the day or high of the day during the London session. But what I mean is, it happens majorly on London session, but not every time though. But definitely, even if it's not every time, at least one or two pairs in a day is going to give you the low of the day or the high of the day during the London session. So you have to. So how do you know? So the first thing, once you are able to, once you are on your charts, right? Let's say you are here present, and then you can see that the market, right from year to year, the market was giving you what was bullish. I mean, was bearish rather. But this was selling. So immediately you get here. Immediately it is during the London session. What you do is that once you see that this thing will start forming blue, depending on the color you set it. So the next thing you want to do is that you now want to go to the lower time frame. You can go to as far back as 1 minute time frame, 3 minute time frame, or 5 minute time frame. But personally, I prefer to use the 5 minute time frame. So you can use any lower time frame lower than the 15-minute time frame. You can use 1 minute, you can use 3 minutes, you can use 5 minutes. So then you want to go back down, because now what is going to signify that there is going to that you are already at the low of the day is or the high of the day is when there is a change of character or a market structure shift. They both mean the same thing. You might hear some might use the terminology of market structure shifts or change of character. So you want to make, once you see a change of character on your lower time frame, you know that you are already at the low of that day. Okay, so let's move to 15-minute time frame. I mean to 5 minute time frame. So before we move to 5 minute time frame, let me let me just mark out this level so that I can I can easily detect it when I get to the 5 minute time frame. Okay. So let's just go to 5 minute time frame. So guys, I have to take my time to explain this in details so that you are not going to make any mistake. I'm telling you, this thing really works. You can use it to pass any pro firm account, and you are going to within 2 or 3 weeks, you are in less than 2 weeks, you are done with the pro firm account. So here is where we mapped out. So let me just take this away. Let me just take this away so we can continue from here. So now, so this is where we have. You can see that the market was giving us a downtrend, a downtrend, a downtrend, right? So then the next thing we saw was what was a this this candle was the last candle that was responsible for this push down. This was the let me zoom it so you can see properly. Okay, guys, I'm just zooming so you can see properly. So this, as you can see, a lower low, a lower low. So this was the last low. So this candle right here was was the bullish candle that was responsible for this push down. This was the lowest, right? This was the lowest bullish candle. So immediately market moves and ahead of market closes below above this candle right here. This becomes a what? A change of character. So there's a change of character here. Let me put it right here. So you can see it. So there's a change of character right here. So can you see that this this candle right here closes above this? So this is a change of character. So the next, so once we see a change of character, we know that we are already in the what? This has already formed the low of the day for us. Once it is within this between the 2 a.m. to 5 a.m. New York time, this once between it falls within this box, you should know that this is your time. And this is the low of the day because there's already a change of character which was forming, which was coming from the what? From the downtrend. So we know that from here we are already what? In an uptrend. So the next thing is what you want. You want the market to come back to what? To an institutional reference point. Okay, so then you would want to take up your your this thing, your trade, yourself from there. I mean your buy from there, and then you want to set your stop loss below the low of the day because you're not expecting the market to come back and break the low of the day for that day again. Then you're I hope you understand what I'm trying to say. So that means so you could see that the market then comes back after going up, it then comes back right here. You can see that we have a kind of a this was the change of character, right? Yeah, right. So we're expecting market to come back and what and retest it once it changes up over here. So we're expecting market to come back and retest this change of character that has turned to what to a breaker block. I am not communicating with you. So once it turns to a breaker block, then you're expecting market to come back retest it. Then you want to what you want to sell and you want to buy from the retest. Then so in this place you have your entry, like this is one entry, this is another entry. So you can enter. Let me just unzoom it so we can see. So this is good. And you know that good moves very, very fast. So and so you want to let me okay, you want to buy it at this level. At this level. So and your take profit will be the next liquidity zone, which is this area, this region, and and stop loss will be below the low of the day. You can see the risk to reward ratio is so massive. I'm telling you guys, you can literally pass a proof from account with this. So, and this is on a 5 minute time frame. You can see your trade got triggered, then up you go without stress free. And then before the market then comes up, you're already out of the trade. That means you're targeting this next liquidity zone. So you've already made your money. So that's one way. So I think I've done this. So let me give you another example of a sell. So then your duty is to go back and then back test it, and then so you can see how powerful this thing is. Okay, guys, here is another one for a sell. You can see that it was coming, it was a downtrend initially. Then once you get here, then all you have to do is go to your 5 minute time frame or 1 minute time frame for a change of character. I'm looking out for, let us go down to the 5 minute time frame so that we can look out for this opportunity. Actually, this works for Hopper, so you don't have to just sit back with just one pair. You're gonna get your it works for every kind of asset, every kind of pair in the forex market. So you are gonna get a lot of uh, trades around this time. Just let me find it. So I'm gonna get to the place where it was highlighted so we can. So this is where we mapped out. As you can see, it was giving us a downtrend. Then we got here, we have this, and then we have this. This was the last um bullish candle that was responsible for the low of this. So when you this is where there's a market structure shift or change of character. Because when you put your line here, you see that this was where can you see that this candle body closes above this level right here. So this was where we had our market structure shift. So then the next thing is that we are expecting markets to come back to it, to retrace back to reference point. So this in this case, we're waiting for it to come back to what to a region of fair value gap. So we are waiting for it to come back to a fair value gap and the nearest fair value gap. Which one is the nearest fair value gap? You can see this 1, 2, 3. This is a fair value gap over here. So what you will do next is that you come back. Let's plot it so you could see that there's a fair value gap right here. Yeah, this is a fair value gap. So you will see that there's a fair value gap. And the market came back around that region. Can you see? So this is a fair value gap. So you can see that the market comes back. This was the market structure shift. This was the area of the market structure shift. And the market comes back to this fair value gap area, this area. So these are our entry points and our stop loss will be below the low of the day. Then if you come back and take our buy cursor, you see that it's it was a good trade. Let me please. So the stop loss is just below the low of the day. And then for take profits, depending on how you want it, you can there are a lot of liquidity zones right here. You can set it at around this level right here, because this is an area of liquidity. This is another liquidity. This is another liquidity that you can grab here. So you can just minimize it from year to year, or you can just extend it higher. Okay, but just to avoid to expect too much from the market. So and then you can see that the market was came back in massive profit. So that is this is one of the prof that you can use. I want to look out for an example of a buy, a sell rather, so that I can close for the day. And I can close this video so you can see that it works for all place. So guys, this is an example of this GBP JPY, and this is on the 15-minute time frame. Look at the market Asian sessions. This is what the market was doing. Then we get around this level, I begin to see a move up. So the next thing I want to do is that I want to go to 15-minute time frame. Let me highlight this area. So you want to go to 15-minute time frame just once you, I think I've already explained the process. So once you are already in this region, so the next thing you want to do is that you want to go to 15-minute time frame to get your your 5-minute time frame or your 1-minute time frame or 3-minute time frame, just to get a change of character or a market structure shift. I prefer the 5-minute time frame. I prefer it so much. So let's look for the area. I hope we don't stay long before we get it. Okay. Okay, we are already there, guys. So let me just take this away. Okay, so we are in an uptrend. Then we actually this market did not trigger. Why did I say so? You can see that this is an uptrend. We then comes back here. This this is the candle that was responsible for the put up. This candle right here. So this is where the change of character is, but the candle did not come back to this fair value gap region. So it just sweep down across. So there was no trade entry around this level. So we look for more setup. Let's look for more setup. I just want to show you a sell Um, so guys, this is one. So around this way, you can see that the market enters. This was this candle that we fall at around this 2 a.m. New York zone, and then we begin to see what something like this. Actually, even it forms the low of the day, then it forms the high of the day. Actually, it was moving in an uptrend. Then we come back here, and then we begin to see a move up. So seeing this move up, so we would easily, this was an uptrend. So seeing this coming down right here, so would want to go to the 15, 5 minute time frame and check out for the the low of the day, the market structure shift. Then we can then take our trades right from here, the highs of this moment up to this moment. So, but I'm interested in this buy. I mean, this sell setup. Though it did not hit the comeback right here, but it really gave us a decent pips. Let us go to the 15 minute time. I mean, 5 minute time frame. Let us just mark this area. Then we'll go to the 5 minute time frame for our change of character. So, so this is where where we are, guys. So I just removed the chart. So this was the low of the day as a result, and this is also the high of the day. So what you know, this was an uptrend. Then all of a sudden there was a market structure shift. This was market structure change of character. So we know that it was gonna sell. So as it came back, so we saw it sell. Then before it even got to a change place of market structure shift around this level. So it was not even a sell per se. I mean this trend, nobody would have caught it. So no, nobody would have caught this trend. This was the main trend that fit this strategy. Are you with me? So once we are at this high, so for the fact that it falls within the range right here, so what we do is that the market moving from here, forming on a high, then coming back, and the next thing, the last candle that was responsible for the push down was, let me see, was this candle right here. This was our change of character candle, this candle right here. Let me show you. This was this candle right here. So this was our change of character. So this was where the change of character took place. So we had a change of character because this candle right here, once it move up, then it comes back here. So this candle right here closes above, I mean closes below this candle. So then the next thing we're looking at for is that we're looking at for a kind of a how do I put it now? We're looking out for a fair value gap. So if the candle do the market to return to the region of fair value gap, so we expect the market to return to the region of fair value gap. Let me make it visible so we can just. I want to. So we expect the market to return to the region of fair value gap. So you can see that there's a fair value gap here. This one, two, three. So when we move this up right above here, so this, so we come here and then we put a fair value gap right there. So that's the region of fair value gap. So you can see the fair value gap. So what market did then? Market then moves back. So we already have a change of character right here. So market then move back down. Then we expect it to, once it comes back to retest this area of fair value gap, from here we are going to place our sell stop. Then we can look at, so let me look, let's place our sell stop right here. So the stop loss will be above the high of the day, and then I'll take profit. This this is one, because this is where liquidity is. So we can set our, set it right down here. I think 2:2 is okay. So this region, there's liquidity residing here, there's liquidity residing over here. So, and there's another liquidity residing over here. The market did not come back to grab the liquidity over here, but it did with liquidity right here and liquidity right here. So we are good to go. So you can see that the market triggered our and hit our take profit. So our take profit was successfully hit. So I can see that the market moved back up there. It's already, we already out of the market. Okay. But if you are targeted here, you wouldn't have made some profit. But personally, if I want to place my stop loss around this level, this is where I'm going to place my stop loss. Right here. Yeah. Let me see. Still, my stop loss, my take profit will not be it. So I'll place my take profit right here, but it won't be it. So, but two, this trade alone has given you about 2 times or 3 times of your risk to reward ratio. So you can see 2.11 risk to reward ratio. Can you see? It is 3.11. So it is 3 times your risk. So I think, so once you have a two to two risk reward ratio, I think that's okay. Two is to two. Or if you have 3 is to 1. I mean two, yes, if you have times two or times three of your risk, you can take it. So you imagine using ProFrame, trading this with a ProFrame account. I'm telling you, you are going to pass the ProFrame in less than 2 weeks, at most 2 weeks. And trust me, you need to backtest this strategy, and then it works. It gives you money as a professional trader. So don't forget the rules. The first thing is, after you must have gotten the 7 o'clock to 10 o'clock a.m. Indian time, why 2 o'clock a.m. to 5 o'clock a.m. New York time. Once you get that fixed, then the next thing you're looking out for is that how you're going to know the low or the high of the day is when you move to the lower, excuse me, when you move to the lower time frame and check out for a change of character or your market structure shifts. So once you get a change of character right there, then you should know that you're already at the low of the day, because if if you are being given a the market is coming as a bullish market from from where it was coming from, then all of a sudden you have a change of character. You should know that the market is about to change from bullish to bearish, and vice versa. Also, if it was bearish, then you know that once you have a change like this, can you see that it was coming from as it was as a bearish candle, and as a bullish candle, it was buying so hard. But once you get here, how are you going to know that you're already at the high of the day when you have a change of character and it's forced around this area? So this is your change of character. You know that you are already in the bearish market. So you know that this high of the day is already locked. So you know that market is not going to move ahead of the high of the day. Or you can, even if market is going to move ahead, you can place a trade safely from this region, because market has shifted from a bullish bias to a bearish bias based on this. So you are looking out for an entry point, and what you're looking out for, you are expecting market to come back to retest the nearest fair value gap, and this is the nearest fair value gap. So market comes back, then retest the nearest fair value gap, then what you see a push down. So that is it, guys. So I hope you find premium content with this, and if you do, please make sure you give me a subscription and give me a like button. Make sure you share this with your friends and family. those of you that you know that you want to trade ProFrame accounts, please go ahead and backtest this strategy. I'm telling you, this is what I used, and it has worked for me. And I'm very sure that it's going to work for you. The London Q zones area. Just try to backtest it, and then you will see how powerful this can give you. So you don't need to start thinking of how you're going to pass your ProFrame account, or you're going to maintain the ProFrame account. With this, you can be sure of having a good risk to reward ratio trading, and you can be sure of having setup every day in one or two mark currency, in one or two currency pair. I'm telling you. So guys, until I come your way next time, in my next video I'll be making some other, because now I'm done teaching the reference point of smart money. So the subsequent video I'll be releasing on smart money will majorly be on strategies surrounding smart money and some top analysis. So just stick to this YouTube channel, because I'll also be making videos in my second video on the Asian Q zone and the New York Q zone. You don't want to miss that. Thank you very much, guys, and keep enjoying your weekend. Bye bye.